Hey, welcome to the Closing Beat, everybody. Happy Wednesday to ya. How you doing out there? Hey, we're missing a light, man. I need all the help I can get. Look all dark and stuff, man. What, ready? Oh, there it is. How you doing today? Hope all is well. We've got a little bit to talk about here today. We are financial advisors that actually pay attention to the stinking market because we like paying attention to it. We manage our own funds here instead of buying funds that cost you money or that we get fancy trips for. Turns out that's a thing. I didn't know that. Many of you know I came from the sort of wealth management side. I did all the button pressing in the background. I wasn't on the front. So I never got the fancy trips. And now as I get older, I realize, you mean if I put money in a mutual fund, I could go to Italy? Like, okay. We don't do that here. Anyways, while other advisors are playing checkers, we are playing chess. What about other purchases, right? That don't have to do with retirement. What about purchases that can help you lower your taxes? What about tax strategies and things like that? It's been a popular topic lately because people say, I don't want to give any more money to the government. And I would agree with you. Anyways, check us out at jazzwealth.com. Let's talk about the markets here today. A lot of individual type news, and that's because earnings and mergers and things going on. That's going to continue, but not a lot of like broad market news, which you could kind of say is a good thing because there's a war, right? So we don't want to hear about any escalation there. But today, the focus is oversold bounce continues back to the 50-day moving average. We got the seasonal stats to support it. That's the fancy way of saying everything that I shared with you last night on Jazz After Dark about how the market is performing there. We also have very limited escalation so far in the war, Israel, everything that's going on over there. And all of that is a good thing, a good sign, a good sign for everything, not just the markets, but the markets like to see that there. We had PPI numbers come out today. That is the inflation that your producers pay, actually. And it did go up, but I do want to point this out because I think they missed this one today when they showed this on the news. Here is your producer price index, and this is just the headline number, like the number that actually tracks forward. It's a little bit low. At the moment, it did go up just a little bit. But nonetheless, we're still within this range, the upper end of the range, from before COVID. So the nastiness, thankfully, is mostly behind us. But I think that's actually a pretty good sign. Remember, the core PPI, which is what I'm showing here on the screen, this is what the Fed likes to use. And then tomorrow, core CPI, that's the consumer price indicator. And that is the inflation number when they say, oh, inflation went up X, whatever. So that's what we're talking about there. And it's still within range. Now, remember, tomorrow's number on inflation is likely going to go up. And this is actually a great way to show this. It's because we're using the 12-month average. Well, if you look at inflation, it looks just like this. Right? And so if we start taking off these numbers and adding in these numbers, the average naturally is going to start to go up. And well, that's what we're going to see there. I am going to guess my core CPI guess for tomorrow is a number that is under 4, probably just a touch under 4. I'm going to go 3.98. And that's because I think the month over month increase in core inflation, maybe 0.2%. Right? Well, look at the rents. If you break down inflation, we should have done that today. If you break down inflation in little buckets there, I think you're going to see that number go up just a touch, but nothing crazy there. Also, the Fed, we talked about this yesterday before I get going into everything else. The Fed said more, all the people that talked today, more talks about rates are, long-term rates are sufficient to do the tightening job that they had set out to do. In other words, maybe we don't have to raise rates more. So we're seeing a lot of that go on. Anyways, let's dive into the markets here and get to work. The S&P, not a lot you can learn from today. Why is that? Markets move in waves. Some people believe in the Fibonacci sequence, right? And they say, 3 to 5 days. We like to see 3 to 5 days down, 3 to 5 days up, sometimes 7 if you're lucky, and then the Fibonacci number continues. That's where we get the 20-period moving average from. It's actually 21, but most people just say 20. And so all these Fibonacci numbers start to fit into the equation of what people believe. Well, it's sort of true. The market likes to move in waves. Like, in other words, if the market's already up 4 days going on, hopefully 5 tomorrow, you want to buy after the 5th day up? Right? It seems a little bit odd when the market breathes in a little bit of flows here. You can look back and see it's very rare for the market to have a string of days without an attempt to bounce. And so we can't learn anything from today other than tomorrow looks pretty promising, provided there's no crazy news or anything, because we finished near the highs of the day today. So the problem to that, if there was a problem, would be, in my opinion, a little bit of divergence in the index. And that's just a fancy way of saying not everything participated today on the way up. There's a lot of help from those big 7 names, right? But a lot of divergence. Some things were down, some were news-driven. You had Eli Lilly today, news-driven. You had some stocks that were down on the day, news-driven, ExxonMobil and things like that we'll get to. And so a little bit weird there, right? That would be my only sort of frustration, I guess. Bond-sensitive areas and really the most oversold areas continue to get their bounce as well. The Fed likely suggesting they just suggesting that there's technically a bottom in the price declines that we've seen in bonds. So real estate, that has outperformed. It's outperformed itself, and it's outperformed the market here in the last couple of days. Same with utilities. Long duration stuff, things that you would use, or things that you would invest in for the long term for future growth. You're paying up today for tomorrow's growth, like the tech sector or communication services there. They did fine. Nothing, I don't know, nothing notable. The big names help lead the way there. There's not too much that I could say that suggests you would expect a whole lot more upside or anything from here. So for me, it would be one of those, I need more information type days, right? Now, all of that can change, right? We have every bit of interest rate risk, geopolitical risk. We have inflation risk still kind of in there because of the numbers tomorrow. We have earnings risk. We've got headline risk from mergers, everything that's going on. So all of that can change. I'm just saying today, if you missed it, if you weren't around and you just look at your 401k or whatever you're investing in, you have nothing to gain from that. A couple headlines and, so be it. That's what it is. I'd like to point out a couple things here. Well, we already kind of talked about it, so I won't spend a lot of time on it here. Let's go over here, actually. So from a performance standpoint, REITs and utilities rank near the top. This is in our research section. If you're one of our clients or you're a research member, you can go in there and follow along with me if you'd like. The most impressive 5-day jump, we could sort by 5 days here, we have utilities and REITs. The best performers over the last 5 days. You want to see something interesting? They're up at the top. Okay, that's nice to see because they've been obliterated pretty much there. They got a jump on the bond market, didn't they? Right. So if you look at bonds recovering off lows, REITs and utilities got a 1-day jump on that. Compare the charts. Really kind of interesting to see that there. All that maybe stemming from the Fed changing their words. They've never said, and they still haven't said that we will not raise rates. The way they're changing the word, fascinating. These people are better at words than I am with my wife. It's really incredible. I could learn a lot from them, actually. I wanted to dive into a few things here. So inside the REITs, mostly all higher here. AMT, and which is cell towers, and Prologis, like an industrial REIT there. Biggest contributors to the gains here, they'd be over here. And you can actually see it down here if you'd like as well. AMT and Prologis in there. On the downside, let's see if I can get it to come up here. Let's just go over to the charts. On the downside, I don't know how much time you guys spend in there. Do you spend a lot of time in there? CoStar, that's going to be one of the ones that's, it's been bouncing, but it ranks towards the bottom. It's one of the weaker ones out of the group if you happen to own it. These guys are, there's a website, they add commercials, 10X. 10X, it's an auction site for real estate. So that they own that one. They own LoopNet if you're looking around for property or whatever. They own apartments.com. They own BizBuySell. They're kind of like, they own all the online sites that we use when it's wrapped around real estate. A little bit of weakness here for them. Can you wonder why? A lot of that stuff wraps around commercial stuff, right? Apartments, multifamily. Where's the weakness right now? Kind of in there. Also, I'd point out Host Hotels. A little bit weaker as well. This would be the weakest out of the group in terms of not participating in the rally. See, over the last couple of days here, it's just sideways, not a whole lot going on. What'd the sector do? Hey, what's going on? Host Hotels, right? Give you a reason to say, I don't know that I need to do more research here. Something's going on with them. If you look at them, you might find that profits are projected to be lower. Average rate per room night might be lower, right? Things that you might be able to hone in on if you're doing that kind of exploration. What else do we have? Utilities, really kind of assisted by Nextera. Look, biggest contributor, right? And that one's just been obliterated, right? So there's nothing crazy there. I mean, I think that's pretty much self-explanatory there. It's a cost to expand, which is what they're doing thing. It's a cost to expand story, and it's really a debt story. It's going to cost them more to do all the things that they want. That's why they've been beaten up so much there. Okay, let's do a little bit of a side note here. This is not a recommendation. I just want to point out some things as we get into earnings season. We shift our focus a little bit. We talk about different things, give you a heads up. This can apply to those of you that like using options to trade earnings plays. Very popular time of the season for that. This could also apply to people that you just own these stocks and you're like, do I need to expect something crazy or not? Here's what we're going to do. Here are, I stopped at some point, but currently largest expected moves and how we come to that. So Dexcom, these guys have really had some troubles lately because we're all injecting ourselves with Ozempic and Wegovy or whatever that other one's called there. And so we're not as diabetic is the theory anyways, that this is going to continue. So anyways, they have their earnings on October 26th. I put aftermarket for you there. The implied move, 10.9%. In other words, people are positioning now, this is not a guess, people are positioning now for a move of plus or minus 10.9%. Let's round up and call it 11. The average move over the last 2 years has been about 7%. So we're expecting a larger than normal move for Dexcom. So if you own it and you happen to, I'm sad for you if you own it, but if you own it and you see a bigger move of 10%, yeah, that basically planned out there. That's what people were participating or hoping to get. If it does not move that much, that's actually a good sign. Even if it falls 5% lower, that would be a good sign because people were betting on a very large move. That would tell you that something inside of their earnings was not as good or bad as expected. Pretty much normal. That'd be like, I mean, I hope it's better than expected if you own the stock, but you get what I'm saying. Meta, Netflix always on the list, KLA 10 core, a lot of semiconductors in there, Chipotle, which is in the news today, Nextera Energy. So look at 7% expected move. It normally moves about 4%. So a 3% increase in performance. That's all expected move. That's all I'm trying to share with you here. These are the top ones. There are certainly others that have larger than normal expected moves implied. However, these are the largest expected movers in the upcoming couple weeks here through earnings season. So I want to point that out. Earnings season for the long-term investor, it can get you, right? And I'm not trying to sound like, what was her name, the lady? I'm going to get you. Palin? Sarah Palin, yeah. Those can get you because you see something that is one day it's up 10% and you're like, yay, sell it. Well, wait a minute. That was actually supposed to happen, or that was planned. People already kind of made their bets and they were positioning for that. Or a stock falls 7, 8, 9% and you think the world is, basically ending. No, that's just the way the option traders had been playing there and the adjustments that they're making afterwards anyways. All right, yeah, let's just do a few stocks in the news here. General Dynamics. The UAW says most of their employees have agreed to strike if no deal by October 22nd. That's another one. Yeah. And by the way, this is not going well, I think, for the UAW because the interest in this story basically gone. I mean, the war, inflation, earnings, everything that's coming up, it's like people are not searching as much. Just go on Google keywords and just search like UAW or UAW strike. People are not as interested. It's not good. You want to create emotion. If you're the UAW, I'm not saying it's a good thing, but you do want to create emotion. They're just not getting it right now. Excuse me. Lamb Weston lowered some of their projections. Nothing really interesting there that you probably want to follow. Plug Power as well. Where's my... I actually don't have the latest on Plug, but they lowered their projections going forward. I don't follow them as much, so I just point that out. You can read the information there. ExxonMobil, probably the biggest name in the news today. They're going to buy Pioneer Natural Resources. PXD is the ticker symbol. They're paying $253 a share. That's the headline. You go a little bit deeper, you go, it's like $60 billion. That sounds like a lot of money. Yeah, it's ExxonMobil's biggest deal ever, actually. And if you look at what they're buying, they will be by far the largest producer in Texas. This is a really, really interesting acquisition for them. The next closest competitor in Texas produces 50% less. So they're going to dominate this deal. And that's, I mean, I assume it goes through, but $253 a share. And ExxonMobil says this will immediately make us money. There's a fancy word where they say this is We expect this to be accretive in Q4 2025 or whatever. What they're telling you is if this deal goes through, as we transition and get everybody situated and change over all the pension or 401k plans and stuff, and we figure out how this all works, we will probably make money then. No, they're saying right away. And that's because of who they're buying, right? That's kind of an interesting one there, I think anyways. Chipotle, it's been a year. No, it's been more than a year since they've raised prices. And they said today, you know, we're going to, you know, not as much, maybe. They didn't tell us how much, but they said we're probably going to have to raise prices again. So go get your burritos and such while you can. I'll stop there later. Delta Airlines, well, here. So Delta Airlines, Domino's Pizza, which, by the way, Delta Airlines is one of those names that's expected to have a larger than normal move. Fastenal, they will all report tomorrow. And Walgreens as well. They got a new CEO today, actually. So I don't know where they stand on that pharmacist strike there. I didn't catch that one today, but they're planning a walkout there. So we'll see what happens there. If you want to learn more about how the market's behaving right now, the Jazz After Dark from last night, really, really good. I thought, I'll pat myself on the back, really good, taking a lot of data and making it really simple to see, like, look, this is what the market's doing. Is it odd? Is it not odd? So if you want a really quick explanation, have a look over there. Okay, I'll take your questions if you have any questions. We covered the earnings coming up for tomorrow. There will be no show tomorrow. I do apologize, but we will be back. Don't worry. We'll be back. Fast Eddie, you got a haircut. I got a haircut. I had to get a haircut. There's people picking on me, saying I was looking rough, looking like Eric and stuff, man. Eric's hair is a mess. So, yeah, I snuck out today. I got a haircut. Took forever. Yeah. Pail in a bucket. Yeah, ExxonMobil, I can't say. I mean, I like the acquisition. Yeah, I think that obviously makes sense for them. It's interesting that they agreed to the deal, but, you know, I can't actually say that sort of thing. Oh, I thought it said Mark Anthony. Michael Anthony, a short squeeze now. These 7 analysts have an average price target of 12. That you post in some kind of article or something, huh? Any thoughts on Churchill Downs as a long-term stock? No, not something I've spent any time recently looking at. Just from a purely technical standpoint, is it oversold or not? Everything that has had a bounce lately has come from an oversold area. If your potential pick has not bounced from an oversold area, why? This is where you start getting a little bit, you know, you critique it. You get a little judgmental. Like, what are you doing? I was going to buy this stock and it's not bouncing like everything else. What's going on? That would cause you to look further. That's the sort of thing that I do. If everything else is giving you a little bit of lift, provided there's been no earnings, you know, it's that time of year. But if there's been no earnings, no headlines, no nothing, what's going on? Why don't people want to buy that stock as well? That's what I would look at. CPI number, core CPI prediction said earlier was going to be 3.98% as the headline number. It will be under 4, so 9.9, 9.7, somewhere in there is what I'm going to go with. Yeah. PJ, spin-off question, does it work the same as a split? For example, no. For example, WPC distribution ratio, 1 NLP every 15 shares, NLP shares be worth 6% and 94%. No. So if they do a spin-off, you are part owner of the new company. That's probably what you're saying there as well. But it doesn't have to work that way. A spin-off can be done privately. A spin-off can be done publicly, more commonly. So no, it doesn't have to work the same way. Neither do mergers either. Look at, no, they didn't do it. I was going to say Best Buy, but they didn't go private, did they? Burger King would be an example to kind of date myself a little bit. Yeah. I didn't cover Birkenstock. They did IPO today. It wasn't going well when I looked, but yeah, I didn't cover it. I don't know. Some things there's always so much to look at. It just wasn't that interesting to me. Opinion on the rally. The SPY volume's been going down each day. Is it going to be? Well, yeah. So I can understand that. You're using the SPY. I'll do the same. So if we go over here, you can understand why the volume would go down on such a quick, big move up to an area that is a question mark. So First couple days, yeah, we found the bottom. This is great. We got bonds finally bottoming out and everything. Great. All right, fine. But as you go, look at how it loses steam. And that's what we were talking about earlier. Why do you want to be the guy that buys on the 5th day? Mindsets change on that 3rd, 4th, and 5th day where people go, maybe I'll see if it pulls back. Or I'll miss this part of it. If it's going to go up straight like this, I'm not going to chase it. You know, mindsets change about that point. The first day when everything's, yes, this is going to be great. Well, you're excited. Everybody's excited because they just watched it all go down and they're like, oh, there it goes. I'm going to miss it. There's your buying. But as it goes, that mindset changes to, and I do the same thing. Why do I want to pay up now? Why don't I just wait? There's also non-believers in there as well. Yeah. Let's see. If I missed any questions, sorry there. If you had $100, what would you buy? Probably pizza. I got a little hankering for, actually, I'm gonna have pizza later, but I've had a hankering for pizza, so probably just a big pizza, a drink, and maybe a nice tip or something like that. Oh, no, you gotta go Powerball. You gotta go Powerball, right? That's tonight. Cody, you can buy Powerball tickets? No. I had like $12. I won from one of those at one point. I'll just probably cash that in. Oh. But if I had $100 right now in my pocket, gotta go Powerball, right? I have nothing else I want to buy. Sorry. Looking to get into bonds, what type are best? Why not just use bonds themselves? Why you want to use mutual fund? Depending on where you're at, you may actually be able to just buy bonds directly. You want to buy a 2-year, whatever, or buy CDs or whatever you're looking at. If you could do it direct, it might save you a little bit of money. Just a little bit. All right, what did I say, pizza? Okay, yeah, we're gonna do that. You enjoy the rest of your day. Remember, no show tomorrow. Don't feel bad for me. I'll be at Disney World, but it's okay. You'll forgive me, right? We'll see you when we see you, and thanks for watching.
Hey, Dustin.
Yeah.
Everything good?
Yeah, I'm good.
Sure, everything's good?
Yeah, man, I'm fine.
Okay.